Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Tuesday, May 19th, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In today's video, we'll dive into the recent crypto fund outflows, Bitcoin's upcoming halving, Ethereum Foundation's internal changes, US digital asset policy developments, a major DeFi exploit, and a new investment in the Web3 space. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now with that out of the way, let's jump right in. The crypto market recently saw a significant shift as global digital asset investment products experienced net outflows of $1.07 billion in the week ending May 16, 2026. This marked the end of a 6-week positive streak, making it the third largest weekly withdrawal of the year. The primary driver behind this reversal was renewed geopolitical risk affecting broader markets. Bitcoin investment products led the outflows with $981.5 million withdrawn, mostly from US-listed products. Despite this setback, Bitcoin funds still hold a positive year-to-date net inflow of $3.9 billion, with assets under management at $126.6 billion. Ethereum products weren't spared either, with $249.3 million in outflows, marking their worst performance since January 2026. Interestingly, while major assets were seeing outflows, some altcoins like XRP and Solana attracted inflows, indicating a selective investor interest rather than a complete market exit. Moving on to Bitcoin, the countdown to its next halving is well underway. With fewer than 100,034 blocks remaining, the event is expected around mid-April 2028. This halving will see the block reward drop from 3.125 BTC to 1.5625 BTC. What's particularly notable is that this halving will occur in an environment marked by large-scale institutional accumulation and the presence of spot Bitcoin ETFs in the US. Major institutional holders like Strategy and BlackRock collectively hold nearly 7.9% of Bitcoin's total supply cap. This halving will likely increase pressure on miner economics, as they may struggle to maintain profitability unless production costs are reduced. The current record-high hash rate through 2025 and 2026 underscores the competitive environment miners face leading up to this pivotal moment. Now for the Ethereum Foundation, which is undergoing significant internal changes. Recently, high-profile departures have included Carl Beek and Julian Ma, adding to earlier exits this year. These changes have raised concerns about the Foundation's future direction and governance. The Foundation is transitioning under a new mandate that emphasizes its role as a steward rather than a central authority, focusing on open-source development and privacy. This shift is part of a broader effort to align with Ethereum's decentralized ethos as the ecosystem matures. Leadership changes, such as the departure of co-executive director Tomasz Stanjek, have sparked debates within the community about the Foundation's ability to adapt and evolve. In Washington, digital asset policy momentum is building. The Clarity Act, a key piece of crypto market legislation, has been making waves, with significant backing from Senator Cynthia Lummis. This bill aims to integrate digital assets into mainstream finance, despite strong opposition from traditional banking sectors, which have reportedly spent $56 million lobbying against it. The policy push reflects broader tensions between innovation advocates and defenders of the legacy financial system. Regulatory clarity is seen as crucial for institutional confidence and operational integration, with a focus on establishing clear compliance pathways. Next, we turn to the DeFi space, where Echo Protocol was recently hit by a $76.7 million exploit. This incident involved the unauthorized minting of eBTC tokens on the Monad blockchain, due to compromised admin keys. The attacker managed to launder funds through Tornado Cash, highlighting vulnerabilities in centralized key management. Echo Protocol has since taken steps to regain control, including burning the remaining eBTC tokens and pausing cross-chain functionalities. This exploit underscores the ongoing risks in DeFi, emphasizing the need for robust operational security and key management. Finally, let's talk about Tomoland, a Web3 platform that has successfully raised $2 million in a funding round led by Sky9 Capital. This investment will support the development of a system that integrates user-generated content with Web3 ownership models. Tomoland is set to bridge the gap between gaming ecosystems and the Web3 economy, marking a significant step forward in the evolution of digital content ownership. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.